We're lucky to start today's show off with one of the best, one of my favorite researchers on Wall Street, Jim Bianco, Bianco Research President. Jim, so Powell didn't come to the rescue. I mean, the odds were hard and long that he would or could. Did you sense anything? Because I did sense there was the way he answered some of the questions and the way he laid it out is they're data dependent. But I don't think they'll wait on a lot of data. He suggested that the hard data that keeps coming in stronger, that maybe the first sign that that's starting to soften up a little bit, they can swing into action. How did you interpret it?
Yeah, something similar. I think Powell's biggest concern is inflation. That we had, if we weren't doing this tariff thing, we'd be talking about sticky inflation and problematic inflation, not maybe runaway inflation. And what he's worried is, what if this is transitory, to use his favorite word?
Well, he resurrected it.
Right. But what if not the inflation's transitory, the tariffs are transitory? Right. And then 30 or 60 days, you're with the hard data, the economy's okay, and you have inflation, and he cut rates a bunch. Then he'd have to turn around and hike rates right after that, and that would create a whole nother disruption. So he's going to drag his feet purposely, I think.
So, but the CME at one point, the Fed Watch tool had 5 cuts.
Right.
And I know Powell thinks that regular tariffs, if we just had a 10% tariff hike, that would be a one-time event, forget about it, don't worry about it. So he's like everyone else, really. I mean, just sort of watching and waiting on the White House. What if we get a quicker resolution to this, though?
If we get a quicker resolution, I think that certainty would bounce back, the markets would bounce back, and that people would calm down, and that would probably lead to a big rebound or rally in the market. So if we were to get that kind of quick resolution, and that's kind of what I think Powell is thinking and hoping for, that it would negate the idea of getting a cut real quick on the 5 cuts. That was at the low of the day because I think the market was worried about a crash, or the Fed Fund futures market was worried about a crash, and now it's kind of backing off of that a little bit.
I'm going to talk about the crash in the market psychology right now. You know, a lot of folks talking about Black Mondays, right? You know, the way we lead up into them. You have these weak sessions, you know, going back to 1929 and some of the more recent crashes. This morning, ISI said that China announced those reciprocal tariffs for one reason, to push the stock market down. It feels to me that the greatest ally that China and everyone else has who wants the status quo is the emotions of investors. And maybe how much of this can become self-fulfilling. If enough people bail on the market, it goes down, the unfortuitous cycle.
Right. I agree. I think that what they're trying to do is pressure Trump by hoping that the market goes down and gives him the, the push to China back off. But I would say real quick, Charles, those countries are under probably more pressure than we are. Look today, real quick, Canada reported their payroll number at a minus 35,000 lost jobs. I think the Canadians are under more pressure to cut a deal than Trump is because of the falling stock market. And that's why the hope is on Wall Street, this isn't going to last long. Somebody's going to come to the table and cut a deal.
When it's all resolved, and it's really tough because essentially we're trying to read the mind of just one person, but President Trump does have a 30-year track record. I don't think, it's interesting that we've been surprised by a lot of these things when, and really in hindsight, we shouldn't have been. 2 days ago, I started my show off talking about Moab, the mother of all bombs. The only president to ever use it was Trump. He came into office and he used the biggest non-nuclear bomb ever. He does this, right? This is a Moab, an economic Moab. It sends a message. I think it makes the resolution of this sooner rather than later. It won't linger on. You won't have a bunch of meetings. You either decide to get on board or you don't. When it dust settles, how do you see things? How do you see it settling? Well,
I think it settles with a deal. I think it settles with a deal that opens trade for both ways, for countries to come into the United States and the United States to move out of the rest of the countries. And I think if it works that way, it will create opportunity and job growth in the United States, and it could be a big positive. But I agree with you. This is art of the deal stuff. You have to start off big and bold to get them to push the ball down the field and start to get the negotiations. No incremental steps, because incremental steps mean you never get to the finish line.
And we've had incremental steps before. Yeah. This is not the first time this topic has come up, but no one's ever dealt with it this way. Do you think the American public has the stomach to deal with it, though? I mean, I think folks in the heartland do. I think the investor class, I'm not so sure. Although most people should be licking their chops right now. To be quite frank with you, not to sound glib or anything, but you should be excited about, the opportunity to buy stocks that you missed, that you wish you owned 6 months ago.
I agree. I think as far as the big thing to watch is his approval rating, because that's going to be a lot of people from the heartland, a lot of people that don't own stocks. It's holding in. If it holds in, then Trump still holds more cards than everybody believes.
And of course, he doesn't have to worry about running for re-election, or maybe he does.
Yeah, exactly.
Jim Bianco, thanks a lot. Really appreciate you.